Imagine you have 10 lakh rupees invested, and suddenly the stock market crashes by 30 or even 40%. The big question is there one investment that can protect your money every time? The honest answer is no, because every financial crisis is different. In 2008, the major problem was the banking and credit system. In 2020, the pandemic triggered a sudden panic. And in 2022, aggressive interest rate hikes were used to fight inflation. The market fell in all three situations, but the reasons were completely different. And that is why different investments behave differently during a crisis. First, we have gold and gold mining companies. Many people believe that when a crisis hits, gold will always save them. But gold mining companies are still stocks. During a panic, investors can sell them along with everything else. Their biggest advantage may come later, when the market begins recovering. Second, there are long-term government bonds. During a crisis like 2008, these can provide strong protection because investors often move their money towards safer government debt. But 2022 showed the other side of the story. When interest rates rise quickly, long-term bond prices can come under serious pressure. Third, we have consumer staple companies. These are the businesses selling everyday necessities, food, toothpaste, soap, household products, and other basic goods. During a recession, people may postpone buying a new car or expensive electronics, but they still need groceries and basic household products. That is why consumer staple stocks can sometimes fall much less than the broader market. And then there is the fourth asset, farmland. Farmland can behave very differently from the stock market. It can generate rental or farming income. And when food prices rise, farmland income and values can also benefit. But there is one major drawback. You cannot sell a piece of farmland instantly like a stock or bond. So what is the real lesson? There is no magic asset that wins during every market crash. An inflation crisis is different from a banking crisis. And a sudden liquidity panic is different from both. A smart investor should not only ask, which investment will make the most money? They should also ask, if the next crisis is completely different, what part of my portfolio can help protect me? Because in investing, winning isn't always about making the highest return. Sometimes the biggest win is simply protecting your money when everyone else is losing theirs.